All right, so today we are diving into some stock analysis.
Okay.
And we're going to be looking at Electronic Arts, or EA,
Right.
the company behind, big names like FIFA and Madden and The Sims,
Yeah.
huge franchises.
Mhm.
And you've given me a report, an earnings call transcript, and some recent news.
Yeah, that's a great place to start.
So that's a good starting point. But the real question is this a stock that, someone should consider adding to their portfolio?
That's the million-dollar question, right? And to figure that out, I think the best place to start is to look at their recent performance, which, to be honest, has been kind of a mixed bag.
Okay.
So their Q3 results for the fiscal year 2025 show that they missed their net bookings targets, which basically means they didn't rake in as much revenue as they were expecting.
That's never a good sign.
Yeah.
So what do you think is behind this dip?
So the report attributes it to two games that underperformed Dragon Age, the Veilguard
Oh, wow.
and EA Sports FC 25.
Okay, now the Dragon Age thing is a
Yeah.
bit of a surprise because that series usually does pretty well. But EA Sports FC 25, that's their big FIFA replacement, right?
Exactly. You'd think that would be a guaranteed slam dunk.
Yeah.
But it seems like the issue wasn't necessarily a lack of interest in the game,
Okay.
but more so challenges with bringing in new players and then keeping the ones they already had because there were some gameplay issues.
Yeah, I can see how that would be a real problem in the gaming world. So did EA do anything to try to address these issues?
Yeah, absolutely. They released updates to kind of tackle that feedback, and they actually saw a pretty good rebound in players, especially during their Team of the Year event.
So not a complete disaster,
Right.
but definitely, a bit of a bump in the road.
For sure, a stumble.
This makes me wonder about their long-term prospects now.
Yeah, that's where the analysis gets really interesting because even with these hiccups, the report actually gives EA a buy rating.
Wait a minute, a buy rating? Really? Even with all that?
Yeah, there are a few things that make them optimistic.
Okay, like what?
Well, one thing is that EA has something called a narrow economic moat.
A narrow economic moat. I mean, that sounds like something straight out of, medieval times.
Yeah, it's definitely Wall Street jargon. But in simpler terms,
Okay.
think of it as like a small protective barrier.
Okay.
For EA, that barrier is their strong lineup of popular game franchises. We're talking about names like FIFA, Madden, and The Sims.
Right.
Like, these games have a huge following all over the world, so it's not easy for competitors to just come in and steal those players away.
So it's kind of like a shield of brand loyalty in a way.
Exactly.
Right.
But the report calls it a narrow moat because the gaming world is super competitive, and what players like can change really quickly.
Yeah, that makes sense. So it offers some protection, but it's not an impenetrable fortress.
Right.
Okay, so we've got this narrow moat and this recent dip in performance, but the report is still saying buy. So what's the logic there?
Well, there are a few key points they highlight. First, their IP, their intellectual property, is rock solid.
Okay.
Even if one game doesn't do as well as expected, those big franchises, those names aren't going anywhere anytime soon. Then there's their focus on live services, things
Yeah.
like in-game purchases, subscriptions, that kind of stuff.
Yeah.
It's like a constant stream of revenue, even when they're not releasing a brand new game.
Yeah, that the microtransactions, love them or hate them,
Yeah.
they definitely bring in the money.
Right. It's a model that's working for them.
Yeah.
Then there's the fact that they're making these strategic acquisitions. Like, they recently bought a company called TierCab,
Okay.
and they specialize in motion capture technology.
Interesting.
So, like, ultra-realistic player movements in sports games.
Okay, so they're investing in making those sports games even better, which are already super successful.
Exactly. Smart move.
So what else contributes to that buy rating?
Well, there's a lot of anticipation for their upcoming releases. EA Sports College Football 2026
Wow.
and a new Battlefield game both have the potential to be huge hits.
Yeah, a new college football game. I haven't played one of those in years.
Right.
And Battlefield, that's always a big deal for gamers.
Always.
So some potential big wins there on the horizon.
Absolutely. And on top of all that, there's the stock buyback program. They've announced plans to buy back $1 billion worth of their own stock.
$1 billion.
Yeah.
Wow, that's a pretty big statement.
It is. It usually means that a company feels pretty confident about their future performance. It's basically saying, hey, we believe in ourselves and we think our stock is undervalued right now.
So strong IP focus on live services, strategic acquisitions, promising new games, massive stock buyback. Sounds like EA has a lot going for it.
They do, but
Lemnar.
of course, no investment is without risk, and EA is no exception. The report also points out some concerns.
Okay, so what are the risks?
Well, the biggest one is the competition. The
Yeah.
gaming industry is incredibly competitive. There are tons of companies fighting for players' attention. New companies are always popping up. And what's popular can change so fast, EA can't just sit back and relax.
Yeah, the gaming world is constantly changing. So what else should investors be wary of?
Well, another concern is how much EA relies on just a few big franchises. If those games start to lose popularity, or if they mess up with a new release, or if the competition steps up their game, it could really hurt EA's overall performance.
It is kind of like putting all your eggs in one basket, or maybe a few big fancy baskets in this case.
Right, and those live services we talked about,
Yeah.
while they can bring in a lot of money, they're also tricky.
Okay.
Keeping players engaged and spending money in those systems is a tough balancing act.
How so?
If they're too pushy with getting people to spend money, they could annoy players and drive them away.
Right.
But if they're too generous, they might miss out on potential profits.
Yeah, it's a fine line.
It is, and then there's always the chance that their new games could flop no matter how much hype there is around them.
That's true. Game development's a complicated process, and even with a big-name franchise, there's no guarantee of success.
Exactly. And then there's what they call integration risk with that TriaCab acquisition.
Okay.
Just because they bought a company with great technology doesn't mean they'll be able to smoothly incorporate it into their existing games.
Ah, the classic synergy problem that trips up so many companies.
Right. So while there are good reasons to be optimistic about EA, there are definitely some valid concerns as well.
Yeah, it sounds like the analysts are having a tough time making up their minds, too, because the report mentions that opinions on EA are kind of all over the place.
Yeah.
Some are lowering their price targets, others are raising them. And there's even one analyst who upgraded EA amidst news of layoffs.
Wow.
What's going on there?
Well, welcome to the world of stock analysis. You rarely get everyone agreeing. It seems like analysts have different models, different assumptions about risk, different comfort levels with uncertainty. Ultimately, it comes down to the individual investor to do their own research, look at all the evidence, and make a judgment call.
Which is why we do these deep dives.
Yay!
To try to help people cut through all the noise and figure things out. But speaking of noise, there's something else I saw in the recent news that worries me a bit.
Oh, yeah.
A bunch of law firms are announcing investigations into EA.
Oh.
What's that all about?
Yeah. That's something to keep an eye on for sure. It seems to be related to that Q3 earnings miss we talked about
Okay.
and the lowered guidance they gave for the rest of the year. So basically, some law firms are looking into whether EA misled investors about how they were doing.
So potential legal trouble on the horizon.
It's too early to say for sure, but it's something worth monitoring. These investigations could end up in lawsuits, settlements, or even some kind of regulatory action, all of which could definitely affect their stock price.
All right, so we've got the recent performance dip, the long-term potential, the risks, the mixed opinions from analysts, and now these legal challenges. That's a lot to think about.
It is.
But before we give our final take on whether or not we think EA is a buy right now, we should probably touch on some news that just came out yesterday.
Yeah, for sure. The world of stock analysis is always changing, which makes it so interesting.
Right.
And this new info could really impact how we see EA.
So what's the latest?
Well, we got more information about those analyst opinions we were just talking about, and it's kind of a mixed bag. Several big firms like JP Morgan, TD Cowen, HSBC Benchmark, Goldman Sachs, Redburn Atlantic, they've all adjusted their price targets for EA.
Whoa, that's a lot of activity. Are they all moving in the same direction?
It's actually a combination of increases and decreases, which just shows how uncertain things are right now.
Okay.
For example, JP Morgan increased their price target from $115 to $125.
Okay.
But then you have TD Cowen, who lowered theirs from $183 to $160.
So still no clear consensus.
No.
Which I guess makes sense given everything we've talked about.
Yeah, makes sense.
What other updates are there?
Well, Citigroup kept their neutral rating on EA, but they did lower their price target from $163 to $139.
So they're not as optimistic.
Yeah, a bit more cautious, it seems.
Yeah.
But then there's MoffettNathanson, who actually upgraded EA's stock and gave a higher price target.
Hold on, an upgrade. That seems to go against what some of these other firms are doing. Why would they do that?
It's a good reminder that analysts can look at the same information and come to different conclusions.
Yeah, okay.
It seems like MoffettNathanson is focusing more on EA's long-term potential and their ability to recover from these recent setbacks.
That's an interesting perspective. Are there any other major developments?
Yeah. One more. Remember those law firm investigations?
Oh, right. Illegal stuff.
Well, it seems those investigations are getting more serious.
How so?
Several firms have put out press releases encouraging investors who lost money on EA stock to contact them.
So things are escalating on the legal front. Not exactly good news for EA.
Not ideal for sure.
Right.
It just adds another layer of uncertainty, and uncertainty tends to make investors nervous.
Right. All right, so just to recap, we've looked at EA's recent performance, dipped their long-term potential, the risks, the mixed opinions from analysts, and those ongoing legal challenges. And we just caught up on the latest news and analyst updates, which paints a pretty complicated picture of where EA stands right now.
Yeah, it is a lot to take in. It just goes to show how important it is to stay informed and do your homework before putting money into any stock.
For sure. So with all this in mind, are you ready to share your verdict on whether EA is a buy or not?
I am. But before I do, I just want to emphasize that this is just one perspective and it's definitely not financial advice.
Right.
Every investor needs to do their own research, think about how much risk they're comfortable with, and maybe even talk to a financial advisor before making any decisions.
Absolutely. Crucial advice.
Ugh.
So with those disclaimers out of the way, what's your take on EA?
Well, after weighing all the factors, the good, the bad, the risks, the opportunities, I'm leaning towards cautious optimism.
Cautious optimism.
Yeah, I think EA is a company with a solid track record and some truly iconic brands.
Yeah.
They've been through tough times before, and they've always found a way to adapt and come up with new ideas.
And they did make that huge stock buyback, which I think shows they have confidence in their ability to overcome these current obstacles.
I agree. And their stock is actually trading below its estimated fair value right now, which suggests that there might be a chance for patient investors to make some money.
That's something to consider for sure.
However, those legal problems are a real concern, and there's always the risk that their upcoming games won't be as successful as they hope.
Okay, so a cautious approach is probably best.
Exactly. If you're thinking about investing in EA, I'd recommend doing your own in-depth research, keeping up with any news or developments, and being prepared for some ups and downs in the short term.
Solid advice.
Yeah.
And for anyone listening who wants to stay ahead of the curve
Right.
when it comes to stock analysis and understanding complex topics like this one, we have a suggestion for you.
We do. This is just a little taste of what we do here on the Deep Dive. We're all about helping you cut through the noise, make sense of complicated information, and empower you to make smarter decisions.
Exactly.
We believe that knowledge is power,
Yeah.
and we're here to give you that power. So if you're ready to join us on this journey of exploration and discovery, hit that subscribe button and ring that bell.